The scariest of scary headlines has finally come to pass. Yes, Steward, the dumpy, biggest tenant of Medical Properties Trust, has finally, officially gone into bankruptcy protection. Now, they've sort of unofficially been sort of close to bankrupt for a while now, sort of teetering on this edge, this will they, won't they, and they finally have. And hey, understandably, this is scary news. Chapter 11 bankruptcies are sort of, they are restructurings of a business, so to speak. Now, that means that they're not immediately going to be going out of business, but I won't BS or beat around the bush about the actual stats here. So, overall, but this is, in all cases, Chapter 11 only results in successful restructuring about 10% of the time. The rest of the time, after it fails, they end up in Chapter 7. And Chapter 7 would be complete liquidation. Now, the price did respond to this news by dipping a bit. Pre-market, there was an absurd amount of volume, a huge sell-off followed by a recovery, and it's sort of been trickling slowly to the side and slightly up for the remainder of the day so far. And I would say I've been of two minds about the Steward bankruptcy deal. So, on the one hand, I was kind of hoping maybe it could be avoided so that, maybe better terms could be gotten when they go to try to sell off stewardship to Optum. And perhaps we could avoid also this disruption in the share price of MPW. But at the same time, this sort of lifts the cloud of uncertainty as to whether or not Steward will indeed have to file for a bankruptcy. And on my Discord, um, we've been discussing for a few weeks now that basically Steward is unofficially, well, now it's official, but they were unofficially in sort of a state of bankruptcy, Chapter 11 bankruptcy. So here we are. One thing that going into official Chapter 11 bankruptcy may have an impact on is the Optum deal, which United Healthcare subsidiary Optum wants to acquire the stewardship physician network from Steward Healthcare. Now, the failing firm defense will basically allow potentially a firm to make an otherwise anti-competitive acquisition if financial issues would force the acquiree, that is stewardship, out of the market, and if no alternative acquirer exists. So now, when United Healthcare and Steward sort of present their case and make their argument for why the transaction should be allowed to go through, they can now raise this defense pretty easily because Steward is, in fact, in Chapter 11 bankruptcy and is then, by my definition at least, a failing firm. In addition to that, it also appears that MPW will be providing what is known as debtor-in-possession financing to Steward. Now, debtor-in-possession financing is interesting. It's potentially very lucrative, and it's new debt that funds essentially the restructuring that's supposed to happen under a Chapter 11. It looks like it would have to be approved by the court that's overseeing the bankruptcy. So there's going to be a good amount of supervision over this process. The DIP financing also gets elevated seniority ahead of other debts that the company already has on the books. So a higher likelihood of being made whole on that debt, in addition to probably being able to charge some pretty high interest rates, I would imagine. And I think the main reasons why MPT would want to do this for Steward in this instance is because it would probably allow time for perhaps the Optum deal to close and also for some hospitals to change operators, meaning that MPW can also sort of use this time to re-tenant some of the facilities that Steward is currently in where they're losing money. And last but not least, providing them the financing that they need to do the reorganization and get things sort of squared away increases the chances that Steward ends up in the 10% of companies that actually get through the restructuring and stay in business rather than moving on to Chapter 7 and total liquidation. I think another aspect of this is the creditors having a seat at the table regarding the reorganization. I think MPW probably wants as much say so as possible, if possible, to be in the driver's seat in a sense, in order to be able to steer this restructuring process to a direction that's advantageous for them. Now, if this reorganization doesn't go well, it could result in a pretty big financial hit for MPT. There is no two ways about that. Now, at the very end of this, I believe at the very least, Steward is going to be swapped out of any hospitals where they cannot, from the operations of that hospital, cover the rent ongoing. I believe that transference of operators in those hospitals is one of the most important things that's going to come out of this. And I think that comes about whether they get through the Chapter 11 successfully or not. And at this point, I do think failure is practically priced in. Now, if they do reach the end of that tunnel successfully and Steward is able to continue operating into the future after the restructure, well, in that case, MPT probably stands to get their arrears rent paid, as well as any outstanding balances on any other debts. And the equity they have with Steward and any joint ventures won't be worthless. MPW has been getting weekly cash flow statements from Steward, so they should have been well aware that Steward has been on life support this entire time and may even have had prior knowledge that this filing was coming. We hope that we will get more color on this at the earnings on Thursday the 9th. I appreciate you watching the video. Please like it for the algorithm, subscribe to the channel for more. Make sure you join our Discord, link in the description, where we discuss stocks like MPW on a daily basis. And make sure you tune in every Saturday at 8 p.m. for the Cashflow Kings live show on the channel, link in the description. Take it easy, everyone.